What's going on, everyone? This is the most important concept within ICT trading that you can possibly master, in my opinion, obviously aside from the PO3, but the two go hand in hand. So what I want to talk about today is MMXM, or the market maker model, the buy and the sell side curve, and exactly how you're going to use that to catch entries. Now, typically, I like to catch my entries off of the 4-hour power of 3, meaning usually we will, let's say, for example, we opened down here and this was the opening of the candle. Usually we like to see low time frame accumulation, manipulation to put in the bottom wick, and then a distribution. But not all of the time is it going to look that clean. By the way, if you want to learn that entry model for completely free and watch me live trade it, you can go ahead and click the first link in my bio. I'm doing a 7-day free trial to my Discord right now. But that's the way I typically like to trade it, as many of you may know. But a good amount of the time, we're not always going to get that. And I get a ton of comments saying, oh, Jack, it's not showing up, every single day, or there was only one 4-hour PO3 set up this entire week that I could possibly take. It's because you don't understand market maker model yet. And that is a good reason of a lot of the entries I get. So in this example, we were looking at the 2 p.m. 4-hour candle. So we did have a bit of a higher time frame PO3, but it wasn't, perfectly clean, right? This was, let's go on bar replay just so we can check it out. So this is typically what we're looking for, right? We have accumulation at the open. We'd expect, if we're bullish, a manipulation, probably below this low, and then a distribution. But as we can see, we kind of just keep going down. So here, what we need to understand is market maker model. So I'm going to go ahead and draw this out and kind of be as thorough but as simple as possible as I can be with this model. So we are going to have, let me start with the curves actually. We're going to have our sell side curve and our buy side curve. So curve 1 and curve 2. Okay, so this is how this model is going to look. Now, this is how price is going to look, okay? Once we hit a selling climax, we will then push down and the market moves in kind of these stair-stepping motions. Now, these can just be reaccumulation legs with no manipulation, or they can be PO3s, meaning a reaccumulation leg with a manipulation, okay? So the market kind of moves in stair steps, all right? Now, at the very bottom here, we will see a reversal. This is our smart money reversal, which we're going to get to in a second. And again, same thing repeated. Kind of stair-stepping motions, back up, all the way to that selling climax, okay? Now, we know how this looks. Let's break down how the market maker models actually look. It's basically just price rebalancing, okay? These are fair value gaps within here. Odds are we manipulate into them and then continue lower. But the two main things we need to understand is 1, the smart money reversal, and 2, the market maker model reaccumulation legs. So here, the smart money reversal. We will change from bearish PO3s to bullish PO3s, okay? So usually we will have an accumulation, and obviously it's not gonna look picture perfect every single time. This is generally what we look for. We have an accumulation, a manipulation to the downside, which this manipulation, if you're trading a market maker model, should be into a higher time frame PD array. So in this scenario, we had tapped into an hourly or 4-hour fair value gap. We'll see on the charts in the example when I get to it, okay? So, like I said, smart money reversal has to tap into a high time frame PD array. Now, this would be your entry down here, obviously off of like an inversion or maybe a change in state of delivery. But in this scenario, and we'll drop down, we saw that the opening of that 4-hour candle was like way up here, right? It didn't necessarily align with this PO3 down here. So I'm going to be a little hesitant, right? That doesn't look like a wick. It just still looks like a very bearish 4-hour candle. So this right here is going to be the entry that I'm talking about when you can't catch the very bottom of that 4-hour candle, okay? You want to wait for price to reaccumulate. So you can let this one go. You can let it, break structure, CISD, and not take that entry. But what you're going to wait for is for price to reaccumulate, okay? So a little bit of sideways movement. Then tap into a fair value gap, okay? This initial displacement will provide, 1 to 2 fair value gaps depending on what time frame you're looking at. You want to wait for price to tap into one of the fair value gaps from that displacement leg initially, which is right here. And then you're not just going to enter blindly off of that, okay? I see way too many ICT traders just enter, boom, blindly off of the retest of a fair value gap. In my opinion, that's probably going to decrease your win rate a decent amount of the time unless you have a lot of market experience, okay? So what we're going to do is we're actually going to wait for another confirmation, which is going to be an inversion or another CISD out of that range, okay? Now, that does what for us? It confirms order flow, right? We want to, 1, respect bullish, and 2, disrespect bearish, okay? If we're respecting one side of the market and disrespecting the other side, that's good. That's strong price action, strong buyers. So generally, that's where we're going to want to go long within the market maker model. If you miss that one, or if you have high conviction and aren't as close to the drawn liquidity, you can also take the second reaccumulation leg. Okay, but basically all you're doing is waiting for extra confirmation, and you're going to target the top of that market maker sell curve. Okay, so to put this simply, if that was a little overcomplicated for you, you have a sell side curve and a buy side curve. The market moves in stair-stepping motions. Okay. Basically, all we're doing is taking a fair value gap retest and waiting for confirmation out of that, okay? And we're not catching the very bottom. Now, there's scenarios where we will trade the smart money reversal and we'll catch amazing plays, but a good amount of the time, we're just gonna catch this second leg right here, okay? So let's go down here and kind of identify what the market's looking like, okay? So we can see a pretty clear sell side curve, right? Sell side curve is right here. Let's let this play out a little bit because I want to remember where the bottom was put in. Okay, perfect. So that was probably the bottom. So this is our sell side curve here, okay? Let's try and identify portions of the market maker model. Okay, so this is a reaccumulation leg, all right? This is a reaccumulation leg, a little bit just catching a fair value gap. This is a reaccumulation leg, okay? Now, this at the bottom is actually going to be our smart money reversal. So we can zoom out onto the hourly time frame and look for any PD arrays. So, okay, perfect. This hourly fair value gap, which has remained opened and untouched. Also, by the way, higher time frame PO3. That's just adding to the confluence. This was also a 4-hour gap, okay? So high time frame PD array, 4-hour fair value gap has been tapped into, okay? That tells me, okay, good chance we're ready to flip into the buy side curve. But because, this could just be bearish and we could be continuing down, I want to give it some confirmation. So this right here is our smart money reversal PO3 into the higher time frame PD array, all right? Okay, now boom, initially, right here, we inverse all of this imbalanced price action, okay? So this whole thing, obviously you can go on different time frames, see if that's a gap, but we have an inversion down here and we also have an inversion up here. So we have inversed and disrespected bearish price action, okay? Now what am I waiting for? I'm waiting for a reaccumulation leg and basically for price to just tap into a fair value gap and let us know that bullish structure is now being respected in addition to bearish being disrespected. So that's exactly what we can see right here. I'll get rid of the high time frame gap just so we can see. Oh, let me go back in there just so we can see a little bit clearer. So we have a couple of gaps we can mark out. We have this one down here and we also have this one. But usually we know that first kind of break or displacement gap is going to be left open as a breakaway. So we're going to wait for this 1 minute fair value gap to get tapped into, okay? We see kind of a small little bit of reaccumulation. Again, nothing crazy. Basically, all we are waiting for is that gap to get tapped into. But like I said, I'm not gonna blindly enter here. I'm going to wait for a change in the state of delivery. So right here, we already have that level marked out, but we have more than 2 candles to the downside, okay? That is a move down. We have grabbed liquidity and we're gonna wait for a candle body to close above that. Okay, so that's my change in state. Stop is very safe at that retest of that fair value gap. And for this, we're going to go up and trade it basically to the 4-hour high, or right here. I think we took it a little bit. I mean, let's see. Here was our execution right here. Okay, so we entered on the candle after that closure, and we basically took it up to essentially the 4-hour high. Yeah, so that was our execution. You can see the fills again. If you do want to live trade this for completely free and master market maker models, PO3, my exact entry model, again, go click that first link in the bio. All right, let's watch this one play out, and we can see another reaccumulation. Another reaccumulation leg, PO3 right here. Right, we have accumulation, manipulation, and we take a buy off that inversion right there. Okay, but as you can see, I probably wouldn't have wanted to take that because my entry would have been right here. We didn't really have a risk to reward. It was like a 1.2. I don't really like taking those. But again, that's an entry you can take. You're not always going to get the perfect textbook A+ PO3 setup with the 4-hour candle, but a good amount of the time, if you can spot market maker and market maker buy model and market maker sell model, you're going to be able to catch more entries. And I'm not telling you guys, go and try and find this every single day. Again, there's weeks like last week where I didn't take that many trades. I sat out, 2 to 3 days of the market. You're going to have that, okay? You don't always have to take a trade every single day, but if you don't catch the very top or bottom of the 4-hour candle, look out for market maker models, obviously in addition to what you're adding in for your daily bias and their confluences. As always, this was taken on Apex. If you guys do want the best discount codes for Apex, just use code LOCKED. It's at the top right here. No matter what sale they're running, that's going to get you the best discount code always. So if you guys want to learn more, again, click that first link, hop in the Discord. If not, leave some comments, and I will see you guys in the next YouTube video.